In this video, I will be speaking about the BTC USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the on-chain data, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of previous monthly resistance, which is now turned support. Now, as the market is testing previous resistance turn support, we could expect a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Dropping down on the weekly time frame, what do we see? Now, here on the weekly, what we can see is that, first of all, I did speak about Bitcoin during this correction and explained all the reasons for which there was a good probability for the market to go and hunt all the stop losses that were placed below this low. We can see that that is exactly what the market did, and at the moment the market is also creating an M pattern. Now, generally speaking, the creation of an M pattern is usually a bullish sign, after which a rejection to the upside can start. And considering that on the monthly, as we have already seen, we're currently inside of support, we have a monthly support level with the creation of a weekly M pattern, indicating that at this point there is definitely the possibility for some bullish price action to start to be developed away from this zone. Now, if we have to really identify where the support is here on the weekly, we can see how this is previous weekly support turned resistance here, which is now once again acting as support here, from which a potential test and rejection to the upside definitely seems possible. Going down on the daily time frame, what do we see? Now, from a daily perspective, we can see that until the market will continue creating daily lower lows and lower highs, we will remain in a bearish state. So what do we need here is a shift from a daily bearish market to a daily bullish market. Now, that could come in many forms, but the easiest form is to see a correction that the market tries to continue lower, fails to continue lower, and manages to break above the structure. At that point, we would have previous daily resistance, which will be turned support. We would also have the creation of a new higher high. And at that point, that is the moment on the retest of the previous resistance turn support, where we would have very good probabilities to see a potential rejection to the upside. So it's very important at the moment to monitor when the structure from a daily perspective will shift from the one of a bearish market to the one of a bullish market. Now, if we go and see what we have when it comes to the on-chain data, especially the exchange reserves, so how Bitcoins are moving on and off from exchanges, what we can see here is that as price was dropping and currently rising, the amount of Bitcoins on exchanges has just been dropping massively over and over again, showing how a massive amount of Bitcoins is getting bought and moved away from exchanges, possibly in cold storage, showing a massive illiquidity of the market, so that if demand gets increased or if the amount of Bitcoins emitted into circulation gets cut in half, which is exactly what will happen in 2024, price should increase to accommodate for this new demand. So shifting back to the daily at the moment is just a waiting game to wait for the market to shift from a daily bearish market to a bullish, from a daily bearish market to a daily bullish market. And if we will see that after the break on the retest of the previous resistance turn support, how we could be approaching a potential rejection to the upside? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.